So we begin with the big issue. What will it take for the Fed to change course?
I think the Fed likes where they are right now.
They're not going to do anything precipitously.
They'll plan to stay there until their hand is almost forced.
Nothing in the data is really forcing their hand.
The bar for the Fed to move, either to raise rates or to cut rates, is exceptionally high.
We would have to have a kind of a blowout to the downside right now to get the Fed off of where they are.
You will have a cut if the trade talks really break down.
It just depends on the data.
The CPI data, the inflation data.
The growth data.
In the end, it will be the data that drives the Fed.
If we get a slowdown,
the economy starts slowing down,
the Fed will move aggressively.
I have zero doubt in my mind, in that environment, the Fed is cutting rates.
They'll just be watching everything like the rest of us.
Joining us around the table to discuss, Gabriela Santos of JPMorgan Asset Management, Jay Pelosky of TPW Investment Management, and Michael Kushma of Morgan Stanley Investment Management. Guys, great to have you with me. I want a thought from each of you on this. To begin with you, Michael, your thoughts. What will it take to get the Fed to pull the trigger?
It will take a combination of weaker data, which we seem to be on track for. Things do seem to be deteriorating on back of deterioration in the rest of the world. And I think it all has to be the fact that the Fed should be surprised that the data is not getting better, because everyone's expecting, green shoots Q1. We bottomed in Q4 last year, but things are not turning out as good as we thought. So if President Trump slaps tariffs on all imports, I think that would be precipitous enough to get them.
That could take a while, though, Gabby.
It could take a while. We're unlikely to get any sort of clarity in that sense for weeks at this point. I do agree, in case we do get a further escalation, a further turning up of the fire here, 25% on $300 billion, then that would precipitate a cut, I think, because the economic impact would be very negative for the U.S. as well.
What do you think, Jay?
I can't add anything to what the Fed is going to do, but what I do, where I think I can add is what it's going to mean particularly for currencies and for the dollar. To me, a Fed cut means a weaker dollar. That's the dog that hasn't barked, and I think that's the thing we've got to look for.